Okay, so the next part of exercise here is this. Okay, so of course we want to select the 5 stocks for our next meeting. So what I'm going to happen here is this. I am actually going to share with you my actual, I'm actually going to share with you my actual watch list. This is my actual watch list. Then of course you all will vote. Okay, I'm actually going to share with 20 stocks my watch list. You all will vote what are the 5 top choice. Then same thing, I'll take this 5 stock, ask the student analyst to go and prepare the presentation. If this is okay, then the next one we'll actually learn about 5 new companies. Okay, now, okay, this is my line of thought right now. The market has actually rebounded. So it's a lesser chance to find undervalued counters already. So if you talk about, let's say, 3, 4, 5 months ago, you have a lot of counters undervalued, especially blue chip undervalued. So it's actually quite easy. As you can see here, you know, like UOB, OCBC, yes, they are close. They are still maybe slightly undervalued, but more to fair value already. So this is my order of preference right now, and on the assumption that I have already invested the 5 previous companies, so that these 5 companies are already invested in my portfolio. So next month, what I'm actually going to invest. Also, this is my order of preference. I will go for stocks with steady dividend yield. I still can find stocks that actually give me steady dividend yield. Okay, that will be my first stock idea, or way to actually get stock idea. Then second is recovery story. Yeah. Okay. Is there any stocks that were like badly battled during the COVID, and you know there's a good chance for them to go back to pre-COVID days? Okay, that's my second one. And the third one is growth business with strong cash position. Okay, I'll talk about that very soon. So agent, immediately I'm actually going to answer a question. Of course, you all have to vote lah. If you all want more growth business, then you actually vote here. Okay, for steady dividend yield, obviously the REITs will have very significant position. Okay, the REITs were very significant position. Now, okay, if you can recall my lesson last month, I only go for REITs with at least 6% dividend yield, or at least my preference. My preference is go for REITs with 6% dividend yield. Of course, I focus a lot on the property itself. So these are the properties I'm okay with it, and they are giving very decent yield. Yes, they are not in Singapore. Those in Singapore one, now the yield is actually a bit miserable. So I'm actually looking at this: Keppel Pacific Oak, Seswa, and Maple Tree NAC. Okay, so this is actually still my watch list. Okay, if you can recall, QAF was also in my watch list last month, so it wasn't selected. I will still put in for stocks, for companies. Okay, for stocks. Anything above 4% to me is actually quite interesting. Okay, so for REITs, I'll go for at least 6%. Okay, for stocks, if I'm going for dividend, I want something that's more than 4%. And these are the 2 that stand out for me right now. QAF. Okay, once again, QAF is actually into food company. You're talking about I can't remember, is it Gardenia or Sunshine? Maybe someone can help me. Is it Gardenia or Sunshine? QF always mix up. QAF, Gardenia, thank you so much. So it's a very stable company, give 5.2. Hong Leong Finance, okay, giving 5.6%. So if you actually check Hong Leong Finance, the PB I think is below 0.7. So again, to me, it's actually quite interesting. And they have been giving very steady dividends. The properties for Keppel Pacific Oak is actually in US. This is US office. Seswa is actually in China. Yes, correct. Outlet malls. Outlet malls in China. Okay, so thank you. Any other questions regarding this list? This will be my first choice. So currently, if let's say I want to buy, these are some of the stocks, my first choice. Okay. 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 If not, okay. Next, recovery story. So of course, like I said, undervalue may not be so easy to find. There are actually some stocks with recovery story. These are the stocks I sort of actually come across them. Yang Zhejiang is actually having a huge order. So of course, at this juncture, maybe I'll share with you how I actually pick up all this information. Let me just, okay, now and then if you are free, you may actually want to read about their company announcement. So SGX company information, company announcement. Okay, company announcement. Okay, if you just key in Yang Zhejiang, okay, how come don't have? Have to type in full. Okay, Yang Zhejiang Shipbuilding. So you can see this is what it actually says here, general announcement. Yang Zhejiang start 2021 on a strong footing and secures US 1.3 billion new orders for 29 vessels. It's just so that I chance upon this news. Unfortunately, is there any way to sort out this news? Don't have lah. It so happened that these are some of the stocks that have been watched list. I do go in and see announcement quite often, and that's how I actually found it. So in fact, if you actually look at it, very interesting. They have quite a number of share buyback. Okay, share buyback. Long story short, is actually quite positive for the company. It's actually quite positive for the company. So you can see, and you can see that in December as well, they actually have secure new orders. 21st December, again, another new orders. Seems like they have been getting quite a bit of orders. So you can see November, so on and so forth. Possible, Samantha, you're right, it actually is possible. So that is the part we actually didn't do. So of course, if you're interested, later you can vote for this counter. And if it's the top 5, I'll get the analyst to find out for you. Okay, so that's how I find Yang Zhejiang recovery. So of course, during COVID, everybody is more careful in building ships, and now it seems to recover. Okay, Genting is the recovery of tourism. Obviously, during COVID period, they are very affected. Now, in fact, now they still are. Okay, but this is slowly recovering. People are going back to casino. And if you realize this, for Genting is actually quite interesting. Okay, if I go to stock facts, stock screener, Genting. Okay. Okay, so you can see, of course, this is in 2020. So obviously their income has been affected. But what I want to show you is their latest quarter. Of course, from here you can actually also go to the company announcement. Oh, okay. Actually, this one only show the full year. Okay, what I want to actually share more here is this. Of course, you can dig a bit deeper. I don't have the report right now. Once their casino is slightly open, if you actually can call there's, of course, you have the lockdown, the casino is closed. Then that one, don't you say, sure lose money. Okay, then after the lockdown, there's one period whereby it's very restricted open. Only members can go in. So even during that period whereby only members that go in, they actually turn profitable already. That is what I can recall. Okay, so obviously, I think given that now tourism is still not back, they have still a lot of rooms for recovery. That's how Genting was actually being selected. Okay, Singapore ONG, why I actually put into this company, also because I have been monitoring this company. Last year, is it last year or the year before, they have quite some bad news. Basically, they have a bad investment. At the same time, they have to change a CEO. But things seems to be actually better now. Okay, maybe I just want to share how I pick up this company. Singapore ONG. I like the business. Basically, is into women women healthcare. They actually go into things like, for example, healthcare service for women, female productive system, pregnancy care and delivery, gynecological and breast cancer. So, I think it's a business which is at least sustainable. Okay, there's always a need. If you actually look at the income statement, net income after tax, it was actually making a loss in 2019. Okay, it was having a loss in 2019. Reason is actually because, okay, let me show you the financial statements. Okay, again, you can see a lot of share buyback. That was another thing that actually caught my attention. A lot of share buyback. Okay, okay, I see whether I can show you here. Okay, so I can't really show here. In any case, they have a loss because of accounting adjustment. Okay, they have to actually record impairment last year. So this year, okay, my point here is this: they have been operating wise, they have been generating revenue, they have been generating very decent profits. Okay, it has been happening. So last year, they actually have to record accounting loss. That means cash wise, it's not affected. Okay, but it's just more accounting. Their business is actually still good. But of course, when that happened, right, when the cheap people see that, wow, you lost, that's why the price actually got affected. Okay, so this year they of course don't have that impairment, and you do expect, okay, the profit go back up to quite the standard level. Okay, let me just try to show you. Okay, you basically expect the profit go back up to about this level, maybe not 9 mil, but 7, 8, about there. I'll go back to this level. And one thing is quite interesting. Okay, they actually talk about profit guidance. I always thought profit guidance is actually bad. In fact, that's not true. Okay, in this case, they give a profit guidance. If you actually read in detail, what they say is they are actually going to expect a profit compared to a loss in the previous year. So even though you have a profit guidance, doesn't mean it's bad. In this case, it's good because last year they have lost, this year they're actually going to make profit. Okay, Sabo and G. Okay, there's actually some question. Let me just read. Okay, why is a lot of share buyback good? Okay, signal that company feel that they're undervalued. Okay, more share to BOD. Company earn more money, want to go. Okay, so share buyback, there is actually a few reasons for share buyback. So you think about it, what is the mechanism? So let's say now I have 100 shares that is floating in the market. Okay, share buyback means I have also cash in my company. So think about this. Let's say my company, I got 100 shares. Let's say 100 of you hold 1 share each. Then I got $100. So I will actually use a company share to actually buy back from you. Okay, so that there's actually lesser share floating. Okay, and then because of that, I have lesser cash. Okay, I have lesser cash. So the first thing I signify here is this, of course, cash is always a limited entity. I can use cash to invest. I can use cash to buy machine. But if I choose to share buyback, means I think the value, the value is actually higher than, investment. So of course, when you share buyback, there's actually lesser share outstanding. Next time when I actually distribute profit, there's lesser people to share with. Thank you so much. Yes, higher dividend per share or higher profit per share. So in general, share buyback is actually a good exercise, and you actually also give the confidence that give a management confidence that they are actually very confident about the company. Okay, I think I'm opening too much until very confusing. Let me just continue. Okay, Escort is just basically a recovery hotel industry. Things will only get better for companies like Escort Genting because You know, last year was really worse, was really very shitty for them. I think can get better. So is it time to actually play recovery story now? Later you will decide. TalkMed. Okay, TalkMed is a company that is quite focused a bit on medical tourism. If I'm not wrong, they have quite a bit of customer from Indonesia, which was affected last year. Okay, I believe they'll be slowly coming back. And of course, the question here is this: is it too early to play this story? Okay, you will actually decide later. Yes, Kong Yam, you are correct. Does company buy back share to issue to employee as part of remuneration? Yes, sometimes they do that as well. Okay. Okay, Keith, thank you so much. So thanks for your opinion. Okay, now we talk about growth business. So of course, this I actually did a top down. So when we talk about growth, I actually highlight 3 areas. One is healthcare, tech, and of course renewable clean energy. So these are the 3 growth areas that I personally has identified for myself. Okay, growth business for Raffles Medical. One thing that caught my attention, sorry, if you have attended my talk enough, SIA is out of my watch list. So this watch list is my personal watch list. I am never a fan of SIA. But of course, this is personal. I'm not a fan, and I'm not patriotic enough to support. Okay, hopefully none of you actually from Temasek or don't get me into trouble. Okay, so Raffles Medical, I realized that the recently it had the counter has been creeping up. That's again why it caught my attention. So if you actually look at Raffles Medical, you can see that the company is slowly creeping up. And of course, same thing. What I did here is this. I actually went to look at their results. Full year result is out. And you can see that the profit is actually increasing. Okay, if you have been following Raffles Medical story, so last 2 to 3 years, last 2 years, in fact, they have been very aggressive into China. They just start up their hospital in China. So of course, the initial phase to start up healthcare in China is actually difficult. It may suggest that they are slowly, reaping their investment returns. Okay, I didn't into detail. So this is if you're interested, you can select this. Then we get the analyst to actually delve into deeper. From Julie Chua, Raffles Medical rely on medical tourism. I think theirs is less. Okay, but last 2 years they actually opened 2 hospitals in China, one in Chongqing, one in Shanghai. Okay, so I saw that it seems that their profit is creeping up. Maybe something is brewing. So that's why I actually put it here. Okay, Riverstone and MedTech. So of course, these are companies who have really churned quite a bit over the last year, if you have been following the story. So by the way, MedTech, if I'm not wrong, is one of the champion for last year SGX stocks. If you actually look at MedTech. MedTech. Okay, if you have bought like, I don't know, 5 cents, that was March last year, you'll be laughing your way to the bank, man. The highest was 185. Now from like 5 cents to how many times? I think I calculated easily about 1000% or whatever. So both MedTech and Riverstone, they are into medical consumables. That means your gloves. I think they do some the bandages. I think the needles. In general, they call it medical consumable. That means use one time, have to throw, that kind of thing. So both of them are into this. Riverstone is Malaysia. I think MedTech is based in Philippines, if I'm not wrong. Okay, let me just confirm. Okay, Philippines, correct. Okay, it's actually based in Philippines. Okay. Okay, even though MedTech has actually rise up so much, why it's actually still in my watch? Because you can see the PE is actually still quite decent, 11 times. Whereas Riverstone is, for me, is purely from a business perspective, because in fact my valuation is actually quite expensive. Okay, Kadipan said Taiwan. Let me just confirm. MedTech. Okay, started in Philippines, presence in US, Europe, Asia. Today the group has office in Hong Kong, Taiwan. Okay, 10 manufacturing facility located in Philippines, then China and Cambodia. So they actually, dual listed in Taiwan. So okay, thank you so much. Okay, so as you can see here, they actually do things like syringes, gauze, digital thermometer, okay, medical supply. Okay. Okay, so this is my healthcare. Okay, so for tech companies, to be very frank, I think for those who know me, I'm not really a techie person. So how I actually choose all this, I actually base it on certain hard criteria. I actually rank them based on market cap. Okay, I go for PE less than 20, and they must be negative net debt. Again, what is this negative net debt? Let me just explain again. So let's say we look at venture. Okay, negative net debt. So if you mouse over, they have the explanation. Sum of all short-term debt, notes payable, long-term debt, and preferred equity minus the total cash. Okay, you take your debt minus the cash. So if let's say this is negative, that means you have more cash than all your debts, which shows that the company is actually in a very healthy position. Okay, cash rich. Thank you so much. Okay, thank you so much, Keith. Yeah. Okay, I almost said something that I shouldn't, but anyway, thanks, Keith. So very cash rich. Thank you so much. So how I actually pick up those company, what I did was this. I went to the stock screener. I look for select sector. I look for technological equipment. Okay, that's what I did. I rank them based on market cap. And as long as their P is 20, I will go in, and if let's say, for example, their net debt is negative, it will be in my list. So this is what is actually being factored out: the venture, AEM, UMS, and Valuetronics. So of course, I believe, yes, tech has run up quite a bit, and I believe there's still room to grow. Generally speaking, we talk about all the AI, talk about all the automation. So all this is part of the value chain. So this for company, venture, AEM, UMS, Valuetronics. And the last group is renewable clean energy. This one is definitely the most in thing right now. Okay, people are talking about it. I think even the US President Biden, he has actually made quite a huge commitment, talking about how you grow this area. We all know that the world is suffering. We can no longer pollute the world anymore. So this is up and coming. So under this sector, the three companies that I found is actually Sembcorp, Capital Corp. Okay, Baostit may not be direct, but they are actually into industrial real estate. Okay, maybe I'll just go to Baostit to learn a bit more about this company. Okay, so if you think about it, they are actually into geospatial and, of course, in industrial real estate. So like, for example, you can read here, they are for energy related engineering, water, wastewater engineering, industrial real estate solutions. So they may not be direct into clean energy, but they are indirectly lah, in terms of the real estate perspective. Okay, so once again, these are the 20 counters that is currently my watch list, my real watch list. Keppel, Seswa, Mapletree, QAF, Hong Leong, Yangzijiang, Genting, Singapore, ONG, okay, Raffles Medical, Riverstone, MedTech, Venture, AEM, UMS, and Valuetronics, Semcorp, Keppel Corp, Baostate. Okay, now the next exercise here is this. You can only choose 5. Okay, later I will flash these 20 counters. Later I'll flash these 20 counters. Okay, you can, out of this, you can only choose 5. Then after that, we will rank and see what are the top 5 counters we actually do for the next month. Okay, I'll get my analysts to actually delve into detail about that 5 counters. So that is the exercise we'll do. Okay, thank you, Will. Bounce is a lot small company. A search in leasing. Yeah, of course, it's a lot smaller. Or has a lot of small company, is it? Yeah, probably yes. Okay, a lot of times they have one project, one company. Okay, so this is what I'm going to do. So in the meantime, you may just want to take a picture of this. I will just put you all into groups. If you just want a quick discussion with your friends or find a bit more, maybe it will take about 10 minutes. 10 minutes. Maybe you want to just Google a bit more before you decide. Then we kind of do the voting. So meanwhile, if you want to, you may just want to take a picture so that you know what are the companies we are talking about.